Before we start, listen to this.
हमारे पास टैलेंट नहीं है, ऐसा नहीं है जी। और ये भी बुद्धिमानी नहीं है कि दुनिया में 10 लोगों के पास जिस प्रकार के औजार हैं, वही औजार लेकर के मैं मेरे जवान को मैदान में उतार दूं। हो सकता है कि उसकी टैलेंट अच्छी होगी, ट्रेनिंग अच्छी होगी, तो उस औजार का शायद ज्यादा अच्छा उपयोग करके निकल जाएगा। लेकिन मैं कब तक ये रिस्क लेता रहूंगा? जो औजार, जो हथियार उसके हाथ में है, वैसा ही हथियार लेके मेरा नौजवान क्यों जाएगा? उसके पास वो होगा जो उसने सोचा तक नहीं।
Feels motivational, right? India being self-reliant and sufficient in its own indigenous defense technology. Believe me, it's a dream of every Indian, and especially of our late beloved people's president.
In Indian history, at no time have you seen, I will ask all of you, 2500 years, any time in Indian history have we invaded any country, but reverses stop. Reverses, so many countries have invaded us the last 2500 years. So our work, whatever we are doing for self, that is our national security.
And we really thought that privatization is a way through of India being self-sufficient in its defense technologies. Well, we'll get back to it. In the meanwhile, welcome to the stock market battlefield, where defense stocks are the new superstars. Investors are scrambling to get a piece of the action. National security, defense spending, and huge returns. It's like a wild west out there. But wait, what if I told you that one of the biggest new defense stock is barely a defense company at all? Hold on to your seats, because today we're talking about Unimech Aerospace, the $400 million company that's making waves for all the wrong reasons. Investors like Sedview Capital and Involvents India Fund are going all in, betting on this company to shoot for the stars. But here's a twist, despite all this hype, 98% of Unimech's revenue doesn't come from defense at all. It comes from exporting aerospace parts to US and Germany. Defense that's barely a footnote in their business plan. But what? Do I mean to tell you that $400 million Unimech riding the defense stock wave isn't actually making money from defense? Exactly, and they're not alone. Companies like Mtar Technologies and Azad Engineering, also touted as a defense player, get most of their revenue from non-defense sectors too. But why are these companies being valued as if they're the defense powerhouse? Well, here's where it gets wild. These companies are trading at crazy valuations. I'm talking about 100x their earnings. Compare that to international defense companies which trade at around 12x. Why this massive difference? One word, hype. Indian defense stocks are on fire thanks to government's Make in India push. And everyone wants in on the action. Defense companies are getting fat government contracts, local manufacturing is booming, and investors are eating it up. But here's the kicker, Unimech is riding the wave, but they are not really a part of the defense boom. Almost all their money is coming from aerospace exports, not defense, and yet they are being valued like a defense juggernaut. But are we being too unfair to them? Let's talk number first. In FY24, Unimech doubled its revenue from 100 crore to 200 crores, and its profits skyrocketed to nearly 60 crores. Sounds amazing, right? But here's the catch, 98% of that came from exporting aerospace parts. They make complex parts for aerospace, energy, and semiconductor industries, with only 3 out of 19 parts being made for defense. Only 3, and they want you to believe that they are a defense company. But you know what? To be officially recognized as a defense company in India, you need to generate at least 10% of the revenue from defense-related contracts. Guess what? Unimech doesn't even come close. They're nowhere near that threshold. They're bundling themselves with other so-called defense stocks, but it's really just a clever play on perception. Here's a sad thing, it's not just Unimech. Mtar Technologies, which went public in 2021, gets less than 4% of its revenue from defense. Azad Engineering, around 13%. And yet, these companies are being valued like the kings of defense stocks. But in reality, they are making their money somewhere else. So how did they get away with it? As I told you earlier, hype. The word defense is like gold in Indian stock market right now. Investors are throwing cash at anything that even whispers defense. But here's the harsh reality. When the hype dies down, these stocks could come crashing back to earth. And trust me, you don't want to be left holding the bag. Let's look at Paras Defense, one of the few real defense players. You'd think that they would be crushing it, right? Wrong. Their profits fell by 17% in FY24 and their stock price dropped by 25% in just few months. Even data patterns, which saw 50% rise in profits, took a 20% hit since July. Why? Because when you are valued at over 100x earnings, there is no room for error. One bad quarter and boom, you are done. And it's not just them. Let's talk about IdeaForge, the drone manufacturer. They saw a 40% profit growth in FY24. But guess what? Their stock price halved. Why? Because it was valued at 111x earnings. You can only stretch valuation so far before the market bites back. So where does this leave Unimech? Are they really a defense company? Absolutely not. Their revenue comes from exporting aerospace parts, but they have slapped the defense label on themselves to ride the stock market wave. Sure, they have grown fast, but it's risky. They're riding a defense hype bubble that's looking a shakier by the day. Let's be real, this is a classic case of overvaluation driven by hype, not fundamentals. Unimech is positioning itself as a defense stock, but their business is aerospace. If the market turns, this inflated valuation could collapse easily, and when they do, guess who will be left holding the bag? You. So what should you do? Should you dive into Unimech IPO or should you play it safe and wait for the dust to settle? Frankly, this is not a channel for that. But I would say that this kind of acts for high valuation and listings not only hurt the investors but the industry as a whole. There is no doubt that India needs more defense-focused companies, but such acts seriously hurts the aspirations of us being self-reliant and capable. And this hurts even more, especially because we are from the generation of APJ Abdul Kalam. We really believed in his vision for India 2020 and somewhere I feel like we have let him down. That's the end of the video. Do tell us your thoughts in the comments down below and do like, share and subscribe for more such interesting content. See you soon.